Toronto's residential real estate market. This is Amir Kiabi with Harvey Kalles Real Estate, giving you an update in terms of what happened in June. The first slide that I'm sharing with you is the number of new listings that became available. So that one way of looking at the temperature of the market is to say, okay, how many new listings are we having, how many transactions, and vice versa. So we are having more listings becoming available across the board. Right? If I'm looking at freehold properties, for example, in June of last year, we had 2,300, let's say approximately freehold properties. This year we had almost 2,700. So that's an increase of 14%. We had an increase of 16% new listings on the condo and other types of properties. And then on the left side of the slide, you will see the same concept for May of this year. So I'm providing a month-over-month perspective as well as a year-over-year perspective. And it seems to be consistent that we are getting more listings becoming available in the market. So higher participation of sellers in the market. And then the other question would be, okay, how is that corresponding with transactions? Are we having more transactions? So the next slide will show you that for June of this year, we actually had less transactions than last year. We had 17%. We had a 17% reduction on freehold transactions in June, and about 33% reduction on condo transactions. And if you look at the left side of the slide, for the month of May, it was more or less the same story. We had a 13% reduction on transactions on freehold and 31% reduction in terms of number of transactions on condo. So we're getting more listings, more participation on the side of sellers, and less participation on the side of buyers. So that would indicate that supply and demand dynamic is tilting more in favor of buyers. There's more inventory available, less percentage of properties are being sold when they're listed, and that's what we call a sales to listings ratio. That's a good measure to track. So the slide that I'm sharing with you will show us that we had a 38% sales to listings ratio for freehold properties in the month of June. Compare that to last year, we had a 52% sales to listings ratio. And on the condo side, that's just a clear buyer's territory. We had a 25% sales to listings ratio comparing to a 42% sales to listings ratio. That's a 42% reduction in terms of that ratio. And then on the left side of the slide, you'll see the same concept for May. So we have established that it seems to be a trend, at least month over month as well as year over year, that there is an environment where things are more in favor of buyers as far as inventory levels are concerned. That's not necessarily to say that prices have changed with the same measure. And then I'll show you later, surprisingly, I think prices are resilient. I'll show you that. But one question that I always ask is, okay, what is the norm for supply and demand for a given month? So what is the norm for June? If we go back like years, how would that look like? This slide will try to answer that question. So I went back 12 years and analyzed the market in terms of number of properties that were listed, freehold properties that were listed in Toronto in the month of June. That would be the top line, and the corresponding transactions, that would be the bottom line. And I went back 12 years, and you can see, I mean, this year we had those two lines were moving away from each other. So you usually would see that if we had more properties in a given year compared to the prior year, it would usually correspond with more transactions. So that supply and demand ratios were usually consistent, hovering above 50%. But this year, I mean, those two lines are diverging. And then it's not the first time that has happened. But to me, it's a little bit significant, at least based on the numbers that I've obtained for the past 12 years. And the next slide will basically give you that ratio. If I divide the transactions over a number of listings, sales to listings ratio, that ratio was hovering above 50%, I would say on average for the month of June for freehold properties. But this year we were at 38%, last year we were at 52%. 2022, for example, was when they started raising interest rates. We were at 41%. But prior to that, I mean, you can see that things, besides, if I put 2017 aside, things were hovering above 55-60%. So you could say that we are in an environment for freehold properties in Toronto that things are perhaps more balanced or more in favor of buyers. That hasn't necessarily corresponded with a significant reduction in prices. They're resilient, but it remains to be seen how that will play out. Next slide is the same concept for condos. It's much more severe. We had 4,400 properties being listed and less than 1,100 transactions, and sales to listings ratio for the month of June, as you can see, was 25%, but I went back 12 years, you will see the norm was hovering above 50%, and 63% in 2019, for example. So this is an indication, this is a leading indicator to me that this excess inventory that is available will make things more easier if you're a buyer, and if you're selling, you're basically competing with more listings. Moving on, this slide is showing you the average sell prices. So for freehold properties, we had a reduction of 2% if I compare average sell prices to last year, June. And for condos, we only had a 1% reduction on average prices. And that's surprising to me. That it could be two things, because we might be having more transactions where the properties are of higher prices, and it's not really comparing apples to apples when we're comparing averages. That's why we have the index prices. I'll show you that chart later. But overall, you could say that average prices were reduced by about 1 to 2% between freehold properties and condo properties, comparing June to June of last year. On the left side of the slide, you'll see the same concept for the month of May. Now, this slide is the house price index, the MLS index price that I talked about earlier. This tries to paint a more universal picture in terms of price movement over time. It's not necessarily accurate for a given property in a given neighborhood. It's more of an overall way of tracking price movement, and then when we aggregate the data, it will become more accurate. But we could say that index prices are lower, very lower for the month of June for single family properties in Toronto compared to June of last year. And the next slide will show you the same concept for townhouses and apartments. And more or less, we could say we are at the same benchmark prices for those two categories in Toronto compared to last year. And then lastly, not lastly, but I'm towards the end of it, I also calculate months of inventory. So based on the performance of the past, let's say 30 or 90 days, depending on how we calculate it, what was, how many months would it take for the current level of inventory in the market to be sold? The more inventory, the more options for buyers, and vice versa. So for example, as of July 3rd, we were at 2.4 months of inventory for freehold properties under 2.5 million, and at 7.3 months of inventory for freehold properties above $2.5 million. So those are two different stories. For freehold properties under 2.5 million, in my opinion, we are still in a very short supply. It's a seller's market, especially if you're in a semi-detached, for example. But if you're at a freehold property above 2.5 million, we have more than half a year of inventory in Toronto as of July 3rd. And that could be an indication that perhaps there's more competition in that segment for sellers. For condos, we are at 6.2 months of inventory. Again, clear indication that we are in buyer's market territory for sure. One way to utilize this months of inventory, because months of inventory is really one snapshot into the market on that particular day. So one way to utilize it is to say, okay, what was this snapshot 2 weeks ago, 1 month ago? What is the trend? Is the inventory picking up or is it going down? And then you can make a judgment based on that. So the next slide will show you the months of inventory as of May 5th, as of June 20th, and as of July 3rd that I calculated. And we could say across all categories, and I have different categories as you can see, we are seeing more inventory becoming available. That's not to say that we are in an abundance of inventory, for example, on all categories. No, I'm not saying that, but I am saying that it's slightly picking up, especially on freehold properties above 2.5 million, I would say. But for semi-detached properties or for detached properties under 2.5 million, we are still in a very strong seller's market. There are, in my opinion, an extreme short supply. And then for condo properties and freehold properties above 2.5 million, I would say that inventory is picking up. So I would keep an eye on that. And lastly, I want to touch upon quickly on rental prices. So for freehold properties, we average $3,500, and for condo properties, we average $2,800 for the month of June. And comparing it to last year, we had a slight reduction. We are getting more supply on the rental side, and that's corresponding with a slight reduction on average rental prices. That's it for my update for Toronto. I hope you find it helpful.